I'm thrilled to have an incredible panel here with us, and I wish we had more time. But let me introduce each of them briefly and invite them to join me here on stage. Afsana Beschloss, the founder and CEO of Rock Creek. Thank you very much. Kyung-Ah Park, Managing Director and Head of Environmental Markets Group at Goldman Sachs. I'm going to sit here. And then Michael Eckert, the Managing Director and Global Head of Environmental Finance and Sustainability at Citigroup, Inc. Thank you very much. Please. So I'm going to talk broadly here, if we can, about the issue of the environment and sustainability. But I especially hope that we can focus in the brief time that we have on the question of capital and capital's role in helping to address a lot of the sort of pressing environmental challenges that we now face. And maybe I'll just start with you, Michael. I mean, what does money have to do with the environment anyway? I mean, why are bankers and investors concerned with issues of sustagnability?
Just so the audience knows, I didn't know you were going to ask that question. So this is
I always do this.
This is actually a journalistic interview going on. All right, that gave me 10 seconds to think of an answer. Okay. No, look, we're shifting from a world where environment meant stopping bad behavior. It took funding of people to go out and drive boats and bulldozers, and I know people, some of them are my friends. So, but today we've shifted into it's not just enough to stop bad behavior, we have to start creating good behavior, and that takes capital investment. It's not just solar and wind. Really the challenge before us is to take all the different solutions, say to climate change, and turn them into financeable activities so the capital can flow there. And it doesn't happen by itself. Many people don't know that the whole renewable energy revolution of wind and solar and so on was actually consciously created and manufactured by a renegade group of people that worked behind the scenes, like myself, and created the feed-in tariff and the renewable portfolio standard and the European goals and net metering and the tax credits and green bonds guidelines. We created all these things intentionally to do that. So I'm very confident that now as we go to work in the broader sense of climate change and SDGs and ESG investing, one by one, we're going to knock this down and be successful.
So Kim, let me turn next to you, because you've wrestled a lot with these issues as well and have a long career working in decisions of how to allocate capital and risk. I mean, is this impulse to have capital informing decisions about the environment driven by some kind of moral imperative, a kind of nanny-like, nudging people to do what's right? Or is there actually a business model underlying this? Is there a market imperative behind these efforts?
Yes, I would say perhaps in the early days of this journey, right, there was a view that some of this has to do with perhaps more risk management and perhaps more reputational components of it. Yep. And there was also a perception when you use the word sustainability, right, that it was a concessionary type of capital investing. Today in the world that we live in, it's very different. One, it's very much mainstream. The size of the prize is huge. Right? When you think about the challenges that we have to address that Mike mentioned, like climate change and sustainability development goals, there are big challenges, but with that comes big sizable investment opportunities, right? Some of the numbers that we see is $1 to $2 trillion for clean energy per year, $5 to $7 trillion for SDG goals, right, by 2030. These are very large market opportunities. Yeah. And then the economics are becoming much more compelling as well, whether it's renewable energy, or whether it's in the context as an investor. If you integrate ESG, particularly long-term investor, it helps you optimize risk return, right? In this very dynamic market environment that we're living in, where there are going to be greater constraints around carbon, resource issues, et cetera. Right. And so it's a very compelling investment thesis, big opportunity. It's a growth opportunity. And it's very much also driven by what our clients are asking for and investors are asking for, as well as our employee base, the millennial generation as well. So the business thesis is very much there now.
So, Afsana, I hear Kyung-Ah mention the reputational considerations and how we've kind of evolved from that to now more of a market focus. but also this acronym ESG, which everybody's got ESG something these days. I was very struck at our Brainstorm Design event in Singapore a couple of months back. We had Tony Fadell, one of the co-founders of Nest, sold this company to Google for billions of dollars, and is now very active in trying to solve a lot of environmental issues with investments in startups. And he made the distinction between, and Alan actually wrote about this, but the distinction between being genuinely green and greenwash. And he criticized a couple of companies for just being, by name, as being just greenwashers. How does that play out in finance? And how can you tell whether people that are talking about ESG and these green capital issues are genuinely walking the walk, or whether they're just engaging in greenwash?
Great question. And I think we have, by some estimates, about 2,200 funds that call themselves ESG broadly impactful on the public side, and about close to another 2,000 on the private side that would call themselves impact and ESG. So I think there is a lot of argument in terms of sort of the industry has expanded, and fund managers see that there is a lot of interest. So a lot of people start calling themselves ESG or impact investors. At the same time, I wouldn't go too far and worry so much about this issue of greenwashing, because I think there is so much, what we were just talking about in terms of the need. When I studied economics a while back, it was that the two important factors in economics were capital and labor. Basically, the way we run financial organizations and investment organizations, and the way economists think, it's still capital and labor, and air and water were externalities, and land. They were kind of there for you. We all know in this room that those things are not externalities anymore. So going back to the whole point about greenwashing, I think there's a lot of people who are really doing this because it is a good investment, and in fact, it has a good impact. And I'm finding also, one side is, as I mentioned, people who are calling themselves ESG. There's a lot of people who are investing in a lot of really, really good stuff. For example, we just recently invested in a telecoms project, and the GP there is providing the last sort of mile to provide internet access for the rural poor. He didn't even know the term ESG.
No.
But if we think about it, that is providing access to the poorest who really, so if I was sitting in my board job at Ford Foundation, I could check the box, social justice and inequality, but in fact, it's a highly, highly profitable investment. So I would be less worried about the greenwashing and look at the fact that there's just so many interesting opportunities to invest in globally.
So, Michael, we're lucky to have you and Kuna here because you were both involved in drafting these green principles that are now kind of a safeguard against greenwashing. Not everyone here may be familiar with those, but can you give us a kind of quick snapshot of what they are, how they came about, and why they're meaningful?
Well, it's an interesting little story. In the spring of 2013, we at Citi had an inquiry from a Middle Eastern oil company if we would underwrite a so-called green bond, and they'd use the $2 billion to upgrade their oil refinery to create a cleaner diesel for the European market. And we said, I don't think so. And then I called the World Bank, and there was no guideline, nothing whatsoever. They've been issuing green bonds since 2007 or 8, and in small amounts. And we issued IFC issued a $1 billion green bond in February 2013. We were one of the underwriters, placement agents, and it sold in 1 hour. So I interviewed all of our salespeople and said, what was IFC doing right? I mean, what's going on here? That was amazing. And so I had those notes, and then that happened, and then a European oil company asked if we'd underwrite a $2 billion green bond. They wanted to recycle capital internally from their $2 billion solar investments. And so we asked, okay, this $2 billion comes in and bumps that $2 billion. Well, what happens to the other $2 billion? And they said, general corporate purposes. And we said, not good. Not that we won't do it, but if the environmental community discovers that you raise $2 billion in a green bond to fund oil and gas, it's not going to go over well. So we were facing a real defensive crisis in the spring of 2013. And everybody thinks the green bond principles was to promote green bonds. It wasn't. It was a defensive effort to protect us, the underwriting banks, and investors and the whole community from what was large-scale greenwashing about to happen. And I would say since we promulgated the green bond principles, greenwashing is dead. It's gone, doesn't exist anymore. Because greenwashing is doing something and covering it over with green. The number one element of the green bond principles, of several, is the issuer has to report after the fact every year, where is your money? It's a guideline to protect us, the underwriters, from greenwashing. It's a guideline that makes the issuers report to the investors so they can report on their climate and environmental impact that they have to do now, because now they have the data, they have the information. And so it was a very practical guideline, non-promotional, and rather defensive in its character. And that's how that happened.
Well, would you share that assessment, greenwashing is dead?
No, I would nuance a little differently in that I agree with Mike in that the green bond principles provided a set of guidelines that the market could agree to, including transparency around the use of proceeds, the impact reporting requirements, and how do you actually manage and allocate these proceeds, right? However, in terms of what constitutes green, there is some consensus around, I would say, a majority of it. But on the tail end of it, there's, I think, still a lot of debate around what is truly green and the shades of different green. And I think it's a healthy debate that we're having in the market as this evolves, right? And if we think about the transition needs that we have globally in the climate change context, right? We need to figure out how to think through the less green components of it and how to get capital to actually move in a way where we help some of the most carbon-intense companies and the resource-intense companies to be able to shift their capital in a way that's more nimble and less of a greenhouse gas impact.
That's a great point. I want to pick up on that because we've had this, which I think everybody's familiar with, this sort of green boom, where everybody was talking about green finance this and green venture that. A lot of people got burned. A lot of people lost a lot of money in the sort of mid-2000s, late 2000s on that. And so there's been this kind of backlash. There was a piece just in the New York Times this morning about how Tony's partner in Nest, a guy named Matt Hodges, complaining that he was the only one really who was investing in carbon capture these days. Everyone else claimed to be interested, but they wouldn't put their money up in Silicon Valley. I mean, do you see that there is still this kind of backlash? Or are we, where are we now in green finance as a kind of evolution?
I think we're over that because, I was just going to mention one of my old colleagues at the World Bank who succeeded me as Treasurer CFO of the World Bank, Ken Lay, who's a good friend of all of us, did the first green bond. And he was very concerned about these things. And that was around 2007, as you mentioned. I think that was exactly the time when, if you remember, Kleiner Perkins was among the firms that did a lot of the early venture investing also in clean energy. And those projects pretty much exploded, and they were not exactly the best investments of Kleiner, and I think they still are impacted by that. Now, if you look
the recent Fortune story.
So I think looking at things today, we're seeing a lot of really interesting entrepreneurs looking at battery life. How do you extend battery life? Looking at still reducing the cost of solar, still looking at ways to improve technology efficiency, still bringing efficient energy sources into homes and creating cities that are energy efficient. So it's sort of going the other way where people are looking at things. And I think when I talk to a lot of entrepreneurs, and we ourselves are investing for a bit in these.
I want to get some questions from the floor if we can, but let me ask one quick question to bring China in before we do that. I was in Beijing a couple of weeks ago. I had a fascinating conversation with Fu Chengyu, who's the former CEO of one of the big state-owned oil companies, CNOOC. He was very forthright in saying that he goes around telling all the other SOE CEOs these days that they're wimps and that they're not moving fast enough. And he said, you guys all talk the talk. You know that we're all supposed to be in favor of environmentally friendly policies. But your problem is your time horizon. You think you have 20 to 30 years to work these problems out. And my message to you is you don't have 20 years. You have 5 years, maybe if you're lucky, 10. And if you don't solve the problem or do something about it in that time frame, one of two things is going to happen. One, regulators are going to come down and break your neck, because we just can't afford to have you continue to do this stuff. Or number two, technology is going to come from behind and clobber you. And unless you're paying attention to both of those things and are scared to death, you're not fulfilling your fiduciary responsibilities. Do you think that reflects the kind of sense of where China is, and how important is China into solving all these problems?
I think I was going to China. I won't say, Mr. Greenberg talked about when he started going to China. The World Bank, I think, opened China in '81, and in the late '80s, I was going to China and working with CNOOC. So they were early in terms of doing the early ENP. And so within energy is a sector where you get exposed probably more to new ideas than many other sectors. And I think he's absolutely right. And the new generation of investors, as you said, which is the generation that's going to start making decisions on which stocks they're going to buy and which companies they're going to invest, are going to be very, very focused on this subject. So for the companies that are behind, they will get killed. And just like we're reading about Bayer and Monsanto, different subject, different problem, but companies can die very quickly if they are in the kind of assets that no one wants to invest in anymore.
I saw a hand here. Yes. Brett's going.
Thank you. This is an excellent discussion, as was the previous one. Any consideration of sustainability in China, however, has to include concern for other factors. I hope that your forum will give some attention in September to the relevance of suppression of human rights in China to sustainability. It's equally important to the very crucial question of environment. I started going to China in '72. I've worked with the Chinese since then in improving their legal system. The recent trend of the last 7 years threatens sustainability in China, not in the immediate, not in the short run, but in the intermediate and certainly the long run. And that means the lack of people in the universities to express themselves. It means the lack of people in the bureaucracy to give their true thinking. It talks about activists in the human rights area. It talks about the mistreatment of minorities in Xinjiang, in Tibet, and there are many Muslim people, and especially Tibetans, in Yunnan province.
Right.
The repression of these people will profoundly affect the reputation of the companies, even the business. There will be sanctions soon applied to businesses that are cooperating with repression in China. The American people are increasingly concerned about this, and I'm concerned because many of us, like Steve Orlins and others, we've devoted our lives to helping China and cooperating. And we can't ignore that and sit here and only act like we have to be concerned about factors that Hank Greenberg and this fine group have expressed themselves.
Well, I think, Gordon, you make a great point, which is that sustainability, you have to take a kind of broader view of what sustainability and ESG really encompasses, and that the feedback loops go both ways. That many of these issues, how you allocate environmental resources have big implications on actual effects on society. It can destabilize, the politics of water is a very big issue. And how society is organized then also affects your ability to actually tackle and address some of these problems. I mean, yeah.
So it's a great point that you're making, the holistic treatment of this, not just can I sell solar panels someplace. I'm a newcomer to China. I first went in 2004 when there was a call for a renewable energy law of China, and I was heading the American Council on Renewable Energy, and Arturo Zervos was heading the European Renewable Energy Council, and Wolfgang Pulse was heading the Renewables Office of the European Commission. So we were requested to come to China to work with a small team to write the renewable energy law of China, which we did. I'm not saying we wrote it, I mean the team wrote it. But it looks a lot like US PERPA and the European feed-in tariff. and the RPS and all those things we had in the US and Europe, which is why that happened. So those are very trusting relationships came out of that, and as a result, two of those people turn out to be, even though they're young, they're very well positioned in the party. And they shared a lot of things that normally is not shared. But I can share because they didn't have secrets. But the party does have a 100-year plan. And the state council's 5-year plans are implementations of that, like you would give to a child, okay, do this next, do this next, do this next. But there is a 100-year plan which relates to the total happiness of the Chinese people. And that's economically, socially, environmentally, everything. And once you know that, and then you can start to see these pieces coming together. And I've never read a journal, any kind of publication ever say what I'm saying, that this plan exists. And so they did build the economy on dirty coal, and they miscalculated on the impact of the pollution, but it is in the plan to then come on with the clean energy, which they're doing now, and they've accelerated that tenfold from the 5-year plan to do 100 gigawatts of solar and wind instead of 10 at this point, because they got to start shutting down the coal, and so we'll see peak coal and all that. But Bill, it's a great question and should be addressed, and I think there's some answers in China that really haven't come out.
I'm getting the high sign here. I wish we could continue, but I am also conscious of the fact that we're standing between all of you and your dinner. This has been a great discussion. In Yunnan, we're going to drill down on 4 specific topics. We're going to take a careful look at green finance, the issue we've discussed here tonight, plastics and recycling, food and agriculture, and then our last topic will be about how new technologies, the cloud, big data, AI, smart cities can be used to tackle environmental problems in a new way. Throughout all those big 4 topics, we'll be visiting individual smaller topics in a variety of different formats. If you have the chance, really would urge you to try to join us in Yunnan. And if you can't make it, recommend other people that you think would be a great contribution to that discussion. China is fully engaged in this, and it'll be a great chance to hear a Chinese perspective on how to tackle these issues. And with that, please join me in thanking our incredibly high caliber panel here, and enjoy your dinner. Thanks very much.